Unmute now. Can you hear me now?
Yeah, loud
Got
and
you,
clear.
Ben. All right.
I had a good laugh listening to you guys
How's
this morning.
Before we get going about shorting the S&P, how's your prostate?
As far as I know, all is well.
All right. So that's our support group for the day. So, Ben, if you know how to share, it's a green box.
Let's do that.
I'm real interested in picking up on your narrative of the 70s. I'm trying to remember, would social unrest, the Vietnam War protests were happening during Nixon, right?
Yeah, absolutely. I mean, this is sort of the outline we're going to cover today. The first thing we'll do is we'll go over.
Share it though. I still can't see your screen.
You can't see it?
No, you click the one.
There's a second screen that's going to come up once you click. That will ask you which screen you want to share, and then you have to click again.
Yeah, let me see. I did that, but let's try it again. Oh, we'll click again. Gotcha.
Yeah.
Okay.
There you go.
There we go.
Now we can see you.
Thanks, Steve. Okay.
So the analog is definitely on our list today to review. We'll go over some of that. There's a few new instances that have come up that confirm and reinforce the correlation. We'll also go over another sort of bigger cycle that's an epoch cycle, a 400-year cycle that'll give us sort of a 10,000-foot view of the bigger picture, the background weather that we're operating in, and because a lot of people are wondering, why is the world falling apart? Why is this craziness going on? And this cycle gives us a little clue there.
What is the definition, or what was it? Who was that cycle named after? What's epoch?
Epoch means a long period of time.
Okay.
So it's a 400-year cycle. It's not named after anyone, or nobody found it or anything like that.
Okay.
So, but let's go right into the 70s analog. We've been talking about this, and Dale, you and I have been talking about this for over a year now, where the cycles that we're currently going through have a connection to the ones in the 70s. And I listened to Andy's talk on Monday, and he was showing the connection was through the 45-year cycle, which is half of the 90-year cycle. So we're connected right now to the events that happened in 1929 and the events that happened in the mid-70s. I've focused in on the mid-70s because I can correlate the events that were happening now with events that happened back then very clearly. And some of them,
all of these.
Yeah, some of them are up here on the board. The check marks we've talked about before. The ones below, and isn't it interesting that the FANG is going on steroids now? That the concentration in these top 4 or 5 tech stocks, or half a dozen tech stocks, is getting worse. It's getting more concentrated. And for anyone that was around in the 70s, there was the Nifty 50, which every manager had to have in their portfolio, and that ended fairly badly. Obviously, since the last time we spoke in early March, and the issues with the virus were just beginning to come to the fore. So I went back and I was researching and seeing, was there a connection to anything in the 70s that could be similar? And believe it or not, there was a swine flu outbreak that happened at Fort Dix in New Jersey that created a tremendous scare on a national level. There were fears of a pandemic. The leadership of the country, the Ford administration, was so concerned that they developed a plan to vaccinate the entire country. They wanted the whole country, everybody in the country, to get vaccinated, all 200 million people. Well, they got about 40 million of the 200 million vaccinated.
There were problems with that vaccine, weren't there?
It killed 25 people, and there was no pandemic. Right. There were issues like side effects and other problems.
Paralysis and stuff.
Yeah. Some major health issues came out of that, and no pandemic appeared. So there was a tremendous public health credibility took a tremendous hit there. That I take as being another hit on what we're going through today versus what happened in the 70s.
Could I just add something? Because a friend of mine is doing
Sure.
a comparison between COVID and swine flu was H1N1, right? Wasn't it the same one? Or was that a different one?
I think that's a different one, but I'm not certain.
Okay. Anyway, there's a big dip in August where people think, you know, it goes up in June and then a big dip in August, but then it doubled from the first wave.
Wow.
And I don't know, someone sent me a chart on the pandemic from 1917, 18, and the first wave looks like nothing. And the magnitude of wave two, the magnitude is more than double. That's all I could say. So,
Right.
all right. So there's a swine flu thing.
Yeah, let's go to the next one. The social unrest you mentioned, obviously everybody's aware of what's happening currently. When I went back and was checking the 70s, the Kent State protests and murder and deaths occurred in 1970. 4 students were killed. 4 protesting students were killed by the National Guard in Kent State in 1970. And then there was a one that I wasn't aware of, but which really connects to today is in Queens, New York, in both 1973 and 1974, there were riots and protests and a lot of social unrest when an undercover New York City police officer shot and killed a 10-year-old black child, a black boy who was running away, shot him in the back and killed him. The officer was arrested, charged, and then acquitted. So when the murder happened, there was rioting in Queens, and then when the acquittal happened, there was even worse rioting. So there is a connection with social unrest and what's going on today. So, you know, I keep this in the background, and I'm constantly looking at current events and then saying, is there a connection with the 70s? Are we still, you know, sort of replaying in a different way, but in a connected way? Are we still replaying these sorts of events from human perception and human emotions? And the answer,
rhyming.
Yeah. The answer continues to be yes. Let's go to the next slide. In January, when we got together and we were talking, I said there's a few major trends that the cycles are calling for in 2020. And these were the 3 broad categories I talked about. In January, the market had been going up. And, you know, as you and Steve were talking about with the VIX, you guys were correct in saying, hey, you know, the VIX looks like a good buy here. There was no volatility. It was all just sort of grinding higher. Well, obviously, since then, we've had a tremendous amount of volatility. I think volatility is going to continue through this year and into the near future. And later in the presentation, we'll talk about a cycle that we're currently in, a window where there's a high probability we're going to see continued volatility, especially in the next 60 days. Okay. Inflation, stagflation was something we had spoken about. We haven't seen inflation yet. And the stagflation obviously is going to take longer because it's related to growth and inflation. But we're going to go through some data, and then I'll go through a few charts and show you why I feel like the rationale for inflation is there. You have lots of money that's being created, and lots of money chasing the same amount of goods or fewer goods is the definition of how you get inflation. Another reason why we should see inflation, governments are going to need to inflate away all this debt that they've created and all this global debt that's been created. An interesting one that I think a lot of people are talking about is reverse globalization. One thing this pandemic has created is it's a desire in people to bring their supply chains back home. Now, how is that going to cause inflation? Well, the supply chains were offshored in the first place because it lowered costs.
Cheaper labor.
Totally. Cheaper labor, cheaper materials prices, everything was because things were cheaper, which kept inflation in check. If we bring these supply chains back home and the world starts bringing their supply chains back home, there's going to be higher costs. The other thing that I think is beginning to play out and we're seeing is businesses are now trying to pass along the cost increases associated with the ways they have to do business now and the closings that they experienced. I don't know if you saw it, Dale, but in Chicago about a month ago, restaurants were trying to put like a 25% COVID fee onto takeout bills or carry out tabs, and people went crazy. They all the consumers were saying, this is ridiculous, I'm not going to pay it, and they quickly pulled it back. But I think that's a precursor to what you're going to start seeing. Businesses are going to start adding fees and charges because they need to
survive. Yeah,
that's right. In order to survive, in order to be profitable, they need to do it. So that's another reason why we're gonna see inflation. The cycles that I work with are pointing to an August to October timeframe of this year when we're going to begin to start seeing inflation, and we'll review a few charts to see what they're saying in terms of that. Are the cycles on track? Do we see any footprints of that? The last area we talked about was commodities. We're going to go over charts of commodities because I think you may have even shown this one time on one of your webinars about the ratio of commodities to stocks is at an all-time low.
Oh, yeah. Yeah.
I mean, I think these markets are in a position where they've been bottoming and basing for years, and there's going to be a strong move in this area in the near future.
I'm thinking next spring for the low on the grains.
It may be. It may be. And we'll go over the grain charts.
Okay.
I have some grain charts to look at. Here's our analog. We've been following very, very nicely. Caught the high in February, caught the low in March. We've been wrong so far on this turn. Being early is being wrong, so there's no question. I'm early and I'm wrong on this. So,
how about magnitude? That surprised you too?
The magnitude has, and I'll show you in the next slide, the magnitude has totally been off the charts.
Because the magnitude on this in the 70s was not comparable.
No, it's completely benign compared to what we just went through.
Okay.
And maybe that's why this move to the upside has been much larger than anticipated, because the magnitudes are just, it's like it's on steroids now. There's no comparison.
Okay.
So this based on time cycles, this is where we are. We are somewhere near this rebound peak after the initial low. And the rollover should come anytime. And if the rollover gets going, the cycles are calling for new lows. I'm doubting now that we're going to see new lows just because of the magnitude of the move higher. But again, that, like you just said, it could be a function of the fact that the moves are multiples of what we experienced in the 70s. So we'll have to see on that.
Okay.
In March, here's how we drew the prospective path. So we were down, but we weren't really down. The next slide will show you how it actually played out, but we were looking for a low shortly after March 10th, which time-wise did occur, and then a bounce, and then a retrace to lower lows. Here's where we are today. So we were here, essentially here at that on March 10th. We made the low, and now the bounce has come all the way back up here. Now the time cycles again are calling for the next leg down. We're waiting. We're looking for evidence. We're looking for confirmation to see if this analog continues to follow. If it doesn't, you set it aside and you do something else. As with anything, you got to get confirmation from the charts. You got to get confirmation in price.
What number would give you that we're beginning to proceed back under the megaphone red line? Would that be that's about 3,100? Would that be a signal to you?
That's a signal, and we'll go over a couple ES charts where we'll show levels where if we take out that support, it'll give us a good idea.
See how patient I am. Right.
So now we're going to really test your patience, because we're going to talk about a 400-year cycle.
Please.
The Epoch cycle is a 400-year cycle. Now, what is this cycle all about? 400-year cycle, you can't trade a 400-year cycle. All you can do is be aware of it and then understand that things that are occurring are being affected by this cycle. So this Epoch cycle was all about building, about creating these large centralized institutions to provide organization, structure, and support for society. So they were things that were created that allowed for tremendous progress, both scientific, social progress, as well as wealth accumulation and wealth building. What we're seeing now is we're entering the end of that cycle. When you're talking about a 400-year cycle, the last 10, 20, 30, 40 years is the end of the cycle. And what we've seen is we're entering a fragmentation phase where there's loss of trust and faith in these once revered institutions. So what we're seeing is people's belief in these institutions and their confidence in them, one by one, they're falling like pillars. They're coming down. I put some of the major ones up there that people would easily be able to relate to. Religion. The problems with the Catholic Church is a perfect example. At one time, it was the most powerful and influential organization on the planet. And now they're having trouble filling up churches. The media. I mean, everybody, this one is front and center now because of all the issues with fake news and all the other terms that are thrown out there. The media was once a revered institution. You watched the 6 o'clock news at night and you got the truth of what was going on. Now nobody believes what they're saying.
No, there certainly are no Walter Cronkites out there.
Nope, there are none. Government is a category in and of itself. Faith in government is at an all-time low. Congress's approval ratings, the president. Now we're seeing institutions within the government themselves that are losing credibility. The FBI, the NSA with all the Snowden revelations, the CIA with the black sites and the torture and the lying to create the justification for war. Most recently, and a trend we've seen in the last few years, is the police. And not only the heinous murders or killings that happen under their watch to suspects or people they're interacting with, but that civil asset forfeiture that they do, where they can take money that you have, even though there's no evidence of crime, no crime charged or nothing. They can just take money from you if you have cash in your vehicle or on your person. It's those kinds of events that are helping to create this lack of faith and lack of belief. There's a few others in there. Obviously, we don't need to go into all of them, but you can see that all of these sorts of institutions are having trouble retaining their credibility and retaining their influence over society and over the population. What's happening next, a lot of people would think, oh my God, it's the end of the world. This cycle is it. They're going to destroy everything. It's not necessarily a cycle of destruction. It's more of a cycle of evolution. We're going to be transitioning into more decentralized systems.
Give an example.
I was going to say we're already starting to see examples of it. And I'll give you an example. We live in a republic in the United States. California does things very differently than Texas. And they're not looking at, oh, we have to all do the same thing. We have to have a centralized government that gives us all the rules and all the ways we're going to do. And even within a state like California, there are areas where things are done differently. Orange County is very different than San Francisco in terms of how they run things. And we're going to see more and more of this fracturing and localization and where people are not going to be relying on a central authority, but a more decentralized authority. I just saw one yesterday, which was incredible because it fits exactly into this. Antifa in Seattle, I saw the news yesterday. They have created an autonomous zone within the city of Seattle where they are going to be in charge with their own rules. And the city is letting them do it. I think it's a 6-block area. You can check the news. It's incredible, and it's hard to believe, but it's happening. So this is the key thing about this. So how do we?
You're saying then that things that Orwell and Huxley wrote about scientific dictatorships having complete control and New World Order stuff is not happening here. It's the other way, fragmentation.
Absolutely. And you know what it is, Dale? Think about this. At the end of a cycle, the existing cycle and the existing power structure does everything it can to maintain control.
Yeah.
It's like a sort of survival instinct, right? It's trying to maintain control, and it's only getting worse. So we are actually moving cycle-wise in the opposite direction than where the powers that be are trying to take us, which is more control, more power, more centralization.
Well, they're not going to give up easy to give that up. Okay.
Absolutely
right,
not. So where do we take this? Let's go. My thesis and question is, are central banks next? Are they the ones? Is that institution going to start losing credibility? Is that institution going to start losing power? Is that institution going to start losing its ability to control things? Well, right now we know in the markets it's all about the Fed and it's all about central banks. I can't tell you how many times a day I hear, don't fight the Fed, or the Fed has your back, or there's a Fed put. That's all we hear. And that's people's rationale and justification for investing because it's worked, right? It's that recency bias. What happened in 2009? Everybody remembers that, right? The Fed came in, they saved the day. If you bought everything, you made out like a bandit. And so people are using that same playbook, and the liquidity tsunami that they have hit the markets with has worked so far, right? The markets are all up, things are functioning. My question and my thesis is that effectiveness of this policy going to work? Is it going to fix the problems in the economy? Is it going to solve the solvency issues? Now, those are major questions.
Yeah, I see your list, and they are failing in a few of them, like velocity.
Yeah, and we'll go over. I have the charts to look at, but the caveat I will put on this: you will get crushed if you try to fight the Fed directly. If you try to fight them directly, they will crush you in the short run. They have more money than you. You cannot outlast them. And this one that I put the asterisks on here is, remember, the powers that be can change the rules of the game whenever they decide it's in their best interest. And remember, in the meltdown in March, in Europe, they banned short selling. They can change the rules at any time. So you always have to be aware of that.
I have a 70s analog for you where that happened.
Go ahead.
During the Hunt Silver squeeze, the COMEX changed their rules to liquidation only and raised margins to force people out of their long positions. And that was the first trip to $50 silver in the late 70s.
Yep. And that's a perfect example. Perfect example. In the 70s
late
also.
70s, yeah.
Nixon took us off the gold standard.
There you change a rule there. That was a big rule change.
So noted, they will always do that when they can.
Yeah.
And so we have to be aware of that.
Those bastards.
It doesn't mean we can't make money. It doesn't mean we can't find, you wait till the giant is leaning over their toes and then you run up and push them in the back, right? You gotta wait. You gotta wait. So let's go over a couple of these economic charts and see what's going on with that. So here's Federal Reserve total assets. Everyone knows they've jacked their balance sheet. In 2007 to 2009, in the last crisis, we went from 890 billion to 2.2 trillion, or they added 1.3 trillion. In this cycle, they've gone from 4 trillion to 7.1 trillion. They've added $3.1 trillion to their balance sheet. So they have fired a bazooka. The money stock obviously responds to that. M2, which is cash, checking, time deposits, CDs, money markets, basically ready cash and cash equivalents, has gone through the roof. So that's no surprise. But as you mentioned, Dale, the velocity of money. And the velocity of money is defined as the rate at which money is exchanged for goods and services. Is like, are people taking that money and spending it? Look at the difference in the velocity of money.
Never seen it down here.
Never. I
How
mean, you
about
go back
the
to
30s.
right. Maybe you go back to the 70s, the 60s. This was all the data that the Fed
Sure.
had on their website, but you can see it's gone down dramatically just from the last recession.
Yeah.
In the Great Recession.
That's a problem with growth, isn't it? It's showing
Absolutely.
that people are just sitting on cash.
It's well here. Let's see. Well, so what are the consumers doing with their cash? Remember, this is important because consumer spending accounts for 68% of U.S. GDP.
Yeah,
68%. So, real personal consumption expenditures, which are basically consumer spending on goods and services on a national basis. Obviously, it's going to go down in the lockdown. So look at that. Look at that drop. Huge drop. So what are these consumers doing with their money? All this money the Fed created, all the money that people have, what are they doing with it? Well, look what happened to credit card debt. Down 60%. They're paying off debt, which is a smart thing to do, right? If you're in a recession, or if you're feared that you're not going to have a job, you want to eliminate debt. So people are paying down debt, and that's reflected also in the personal savings rate. Look at the savings rate.
Wow.
So the consumer is not reacting to all this money in a similar way that they have in the past. Does that mean they're going to stop spending and we're going into a depression? Absolutely not. We don't know that. All we know is what they've done so far. And so far, it's different than in previous recessions, especially the last one. Here's another interesting chart, and then we'll get into the charts on the commodities and stocks and everything. This is credit card spending. This is Bank of America internal data. The thing that was most interesting to me about this chart is that even in the states where they're mostly open, online retail has stayed tremendously strong.
Yeah.
I mean, look, in the mostly open states of Georgia, Arizona, and Florida, look at the percent change in online retail year over year. It's stayed steady with the other states where obviously that's the only way they could shop. Again, look at the overall spending, though. It's not painting the picture of consumers that are just rushing out to buy everything they can.
Yeah.
We'll have to see if it's a one data point or if it's a trend, because obviously with consumers being 68% of GDP, it's going to have a dramatic effect on how things go in the economy and the growth. The first one we want to talk about is the dollar. It's all about the dollar right now in terms of my work. And the reason being is the only way that they've been able to goose this stock market is with a weak dollar.
Right.
And if the dollar gets strong, and if the dollar goes higher, you're going to see stock market weakness. If they trash the dollar, we'll make new highs in the stock market. I mean, it's been that for me, it's been that pretty clear that's what's happening. Now,
what's going to tell you which way?
I've got a couple levels on the Dixie. 95.65 is important geometric support, and where this trend line comes in, right here. You see, this is the half.
I've heard that number from various sources. Okay,
yeah, so that's a good number. If we hold that and we can move up here, we can go all the way up to the resistance here. This geometric resistance up here is in the 104 area. Okay. And obviously, if we clear that, you got a lot of fresh air here to move.
Okay. So we're really at a critical juncture.
Critical spot.
Yeah.
Here's EURUSD. That makes up over 50% of the Dixie. So you can see we're at a critical spot in the euro. I know a lot of people are calling for a higher euro, but we're right up against it right now. Yeah. And if we see weakness, this is the geometric support, and that's at parity.
Yeah.
That's at 1.
Nice look.
Yeah.
And if we break out?
If we break out, you're talking about up here, you have geometric resistance on the euro in the, it's like the 118, 119 area.
Okay.
So you could have a hell of a run if we get out. 10-year treasuries. I wanted to show this chart because even though the Fed is sort of sitting on this market and damping volatility, there is a big move coming. These circles generally hold price. And here we've had about 4 touches at the edge of the circle. And when you come out of the circle, you see dramatic moves. So we're either going to go down here and test this support, or we're going to go up here and test resistance and break out to new highs. So I think the 10-year treasury, like all these other markets, I mean, the interesting thing, and this is what I look for in the cycle work I do, is what are the cycles saying, and then are the charts also in showing me similar signals? And the signal is we're going to get some big moves in markets very, very soon. And that's commensurate with all the cycle work that we talked about in the 74 analog. Here's the ES monthly. So here's some important levels on ES. 30-25 area is very important geometric support. So if we get below 30-25, I would say things are looking pretty good on a monthly basis, like we're going to be heading down, and we'll see how deep the correction goes. The geometric resistance up here on the trend line resistance is all the way up to 33.20. So there's a lot of air up there to run if it wants to run.
Okay.
Weekly is another look. It sort of dials it in a little for you. 3270 is the bingo number. If we get to 3270 and can't break out, that would be a failure. If we get above that, you're looking at new highs. On this, 30-25 is the number. So that 30-25 area comes up on both the monthly and the weekly in terms of a critical area to see if we're actually going to start this correction.
Okay.
We talked about inflation. One of the areas that I'm seeing that there's big bases building and charts are starting to give signals that we're going to see some moves is the grains. I don't know if it's going to be a weather event this summer or something's going to happen that's going to affect the crop, because it's all about that marginal supply. But the charts are saying they're not going down anymore. They just aren't going up yet. So these things are something we're watching on a daily and weekly basis, looking for the signal of when to get long. But here on beans, you can see we've essentially been building a base for 4 or 5 years. Had this little false break a few months back, last fall, had a false break, and now we're building and we're building and we're building. So I'm watching soybeans for a signal to start getting long there. Same thing in wheat. It's actually a little further along than beans, but again, look at the base that was built. 4-year base, beginning to turn up. Testing this downtrend line. The moves.
It's interesting you bring up 4 or 5 year bases. Earlier in the show where Blake was showing a weekly Euro chart, and basically we've had 5 years of base building there too.
And it's happening in market after market after market. So cycle wise, it's saying there's big moves coming.
So is there one more shoe to drop before lows are in, or are we on the verge of breaking out on all of these markets? That's
the question.
We're at here. Yeah.
Yep, that's the question. Here's corn, 6-year base in corn.
Yeah.
And we're sitting on support.
Yeah.
Let's go. We'll go through these quickly. Here's gold. Everybody wants to talk about gold.
Yeah.
Look at this beautiful circle, how it's held price here.
Yeah.
And again, there's a big move coming out of here. No doubt this 1800 level is crucial. We clear that, it's up and away, man. Yeah. 2300, 2250.
Well, we'll be coming out of this circle in another month or so, right?
That's correct.
Okay.
Yep. So big moves are coming in gold, and I'm very bullish on gold. Same with silver, but look at silver. Look at the base on silver on a monthly basis.
Grains.
Yeah, it looks like a grain, doesn't it? It looks like the grain charts. Silver's building a tremendous base. Now we still have this downtrend line to deal with, but once we break out, silver could run. There's no question about it. I'm bullish on gold and silver, very bullish. Crude's another one, and here you can see an example of what happens when we break out of the circle.
Yeah.
We had crude in this circle, rising nicely, came out of the circle. Look at the move out of there.
Like that.
Now, we hit support here. We're sitting on support here. The issue with crude, I think, is unlike all those other charts where we're seeing those bases, you're up on a spike. So you got work to do here before I think we see a sustained advance on crude.
Okay.
You guys were talking about the VIX, and it's funny because I think the VIX fits perfectly with one of the cycles that we're watching here. We are right now in a period where there's a high probability, I mean greater than 90%, and the period goes from now until late July, early August. There's a greater than 90% probability that we see big moves in volatility. If you look at the VIX chart, it's telling you the same thing. The pullback, while dramatic on the VIX, is resting right on key structural and geometric support.
Yeah,
so
we're at the low end of the new regime of volatility.
Yep. And your idea of VIX calls, I think, is perfect. I've been adding VIX calls, as the market allows me, because I think.
What strike?
I'm actually buying some VXX.
Oh, okay.
So it's the leveraged version. But
how do you know where to center the circle? Amira Cohn is asking.
You have to use geometry, and you look for touches on the edges of the circle.
Subscribe to Ben's service; he'll teach you. He will. He'll teach you, won't you?
It's a free service on Twitter. I just post stuff on Twitter.
Okay. All right.
Last couple charts. Here's, the things I'm talking about are we've talked about are very big cycles. As a trader, you got to eat, right? You got to put food on the table. You have to eat. So in addition to doing this big sort of macro stuff and positioning, we also look at, sort of the day-to-day hand-to-hand combat. This is an ES 4-hour chart showing support and resistance levels that we use to gauge where the market is in a short-term cycle. Like, where is it? What's the most probable thing it can do? Are we on support? Are we on resistance? So we use this to frame the daily action. And then we post these fuse lines every day on Twitter for free that show where price, these in combination with the patterns at +3 forecast, which are in the pinned tweet, you can get a real edge in short-term trading. And these are ones, this isn't cherry picking, this is just from Monday's action. We had this, we call this a hellfire pattern around the line. We're on top of the line, so you look for a breakout of the triangle, and then you get this kind of move. Same thing here. This was the line that was generated later in the day. These are dynamic lines. You break out of the pattern, you get a nice move. So this is kind of what we do to take care of the short term.
There you go.
And that's it. That's
so
your
the best way. This is the only place people who follow you is at Ben Maldonado. I'm sure glad you changed it to your name instead of Benji. Right, buddy.
That's
okay,
right.
so Ben's work I think is outstanding. Telescope, one of the rare guys that can use a telescope and a microscope. So this is where you follow him at Ben Maldonado. Another great presentation, Ben.
Thank you, Dale. And if if you have any questions, you can just hit me on Twitter or run them through Dale, because I'm on the show every day. And I think if you're a trader and you're trying to get better in the markets, if you don't spend every day on this webinar, you're just selling yourself short, because every day you can learn something.
So we'll continue the bromance. Maybe the end of August you could come back, and I'll get a hold of you on Twitter, Ben. Thanks for edifying our community with your great work today.
Thanks, Dale. Best of luck.
All right. My trading warrior brother, Ben Maldonado. Follow him on romance, on Twitter at Ben Maldonado. All right, everyone. Have a great day. See you tomorrow. Don't just count your pips, count your blessings.